So let me just carry on further. I want to go more to the juicy part where, remember previously I said that they got an offer for $1.2 million and they actually sold it and they paid a fair whack of money in capital gains tax. I want to apply the exactly same thing under this structure. So $600,000 what they paid for it, and now they want to sell it for $1,200,000. Exactly the same as the other scenario. Now, Tony and Nada are still quite young. They're under the age of 55. The only reason why I'm saying the age of 55 is under the law. Let's ignore that preservation age increasing over time. But at the moment, let's assume they are under the age of 55 and they go and sell the particular property. What would happen previously? What happened is they got the 50% discount. In a superannuation fund, they get a 33% discount. Okay, so what would pretty much happen is the $600,000 that they actually made as a capital gain, they actually will pay tax on 2/3 of that, which is $400,000. Okay, $400,000 is then get taxed at 15%. Okay, and the tax on that will be about $60,000. Okay, so worst case scenario, in a superannuation fund, they're under the age of 55, they sell the property, make a capital gain, $600,000 profit, they pay tax on $400,000, the tax on 15% on the $400,000 is $60,000. Okay, which again is dramatically less than what they paid previously. Now let's go one step further. Nada says, no, I don't want to sell this place. I'm too much attached to it as an investment. It's got a lot of potential and whatnot. And they sit on it for a few more years. All of a sudden, Tony and Nada are aged 56. All of a sudden, someone comes to them and says, guys, I love this property that you've got. A few years ago, they got offered $1.2 million. Nada said, no, I don't want to sell it. All of a sudden, they got an offer for $2 million. Nada will ring me up and say, Nada, Tony wants to sell this place, get him off my back. What do you think I should do? Do I accept this $2 million offer or not? How old are you? Well, she's 50, they're 56 at the moment. So what I would say to them then is, if you want to sell the actual property, no problem at all. But before we proceed in you going and selling the property, please let's make sure that we convert your super fund into a pension fund. Now what does that mean? It simply means, see how when you go to Centrelink and you apply for a pension, age pension? You're going to your super fund and applying for what's called a transition to retirement pension or account-based pension. Okay? So whatever money is sitting in there, we're going to start drawing on that money and drawing a pension to Nada and Tony. Because they're under the age of 60, they have to draw out 4% of that money as a pension. Now you may say, well, why? I don't really need that money, I'm still working. That's correct, you are still working, but the only reason why I'm doing it is I want to actually change the status of this fund from what's called accumulation to a pension fund. The main reason why I want to do that, I'll explain in a second. So, we do all the pension agreements, convert the super fund into a pension. We start drawing a pension to Nada and Tony. Yes, they may say, we're still working, we don't really need this money. We're only going to draw the minimum. We can draw anywhere between 4 and 10%. We only draw the minimum because you don't really need the money, but we just want to satisfy the law. And there's no problem with you then contributing that money back into the superannuation fund if you wanted to.
What if one turns 56 before the other?
Okay. 55 is the age that you can actually start to draw a pension from the fund.
So just one needs to be 55?
No, well, if one needs to be, if one is 55 and the other one's 54, okay, that just simply means that whatever balance that NADA has in your super fund, because remember here you had 100, as time goes on, that 100 could be now 400, 500, 600,000. It's your 600,000 that we will quarantine as a pension, and Tony's well, we can't draw it as the same accumulation phase.
So they're still treated as separate entities, the donors?
Yeah, you never lose sight of your balances. When we do the accounts of your super fund every year, we do see how you normally get a statement from Rest, and he gets a statement from we do statements to show you what your balance is and what Tony's balance is every year. Okay, so you'll always know what your balances are year in, year out.